All right, good afternoon, everyone, and welcome to the complimentary live trading showcase. Wanted to help introduce you all to this event to help you see some of those market setups and results in real time. Doing this in the afternoon, but making sure that you're aware that the next event is going to be starting next Tuesday, Wednesday, Thursday from 8 a.m. to 10 a.m. Eastern. That'll be May 20th, 21st, and 22nd. We're going to be going over the top 5 mistakes that traders make in the market. So most of them stem from not having a step-by-step pre-market routine. We think we have a pre-market routine, we come into the markets and we start looking for trades, but we really don't know what we're looking at and having that consistently. So what's going to be different about this upcoming event is that we're going to be looking for very specific information and having a step-by-step process in order to do it. You're also going to get a complimentary checklist as far as what's going to be the key points to look at for trading in the markets. Plus, you're going to be seeing the results in real time since we have that time in the markets to see the setups in real time. For those of you who register as well, you will get one of the previous 3-day events or an hour of one-on-one coaching. Let's jump into the market, see what's going on for today. Have you guys been keeping an eye on what's been happening this morning in the markets? Or are you guys just jumping into it now? Either way, we'll catch up. Let's see, the equity indexes for the most part, we can see the S&P having a pretty big move to the upside. Coming down on, here we go, over here. We can see a lot of the equity indexes have been moving up today. Seeing what's going on and understanding why the markets are going up, part of that will be part of the pre-market routine. Nice, Deepak. So we're moving up. Now, what that means is if we're up 0.71% today, that means that yesterday and for our pre-market routine, we should have been looking for a long trade setup, right? So the one key trade opportunity would have been going long on the equity indexes to take us to the upside. Now, what key odds enhancers might we want to incorporate into a checklist to look for whether to go long? We're going to have a separate checklist for what do we look for long trades, and then what do we look for our short trades. As far as long trades, one of the key odds enhancers that we'll look for is something that we talked about in the last event, and it's called the double-sided breakout. Does anyone here know what that is? Anyone know what I think there's a couple of you who are here from the last event, but is anyone aware of what the double-sided breakout is? Absolutely. So if we're looking at what's going on today and we're seeing the markets are moving up, and I always like to go back and say, okay, what information was there? The double-sided breakout is when we look at a previous candle and the daily candle after that breaks the low wick of that candle and then simultaneously is able to break above the high wick of that candle. So here we have the doji, the daily candle broke below the low wick of that doji candle. And then in one swift motion, it also broke above the high wick of that doji candle. So what does that mean as far as, well, are we looking to go long or are we looking to go short? If we have a double-sided breakout, that means the buying strength is so much stronger than the selling pressure because we didn't have just one breakout, we had 2 breakouts. And if you know from my previous sessions, we look for the fake out breakout a lot as an odds enhancer, but the double-sided breakout is taking that much further. So what we'll do is in our pre-market routine, we'll isolate that double-sided breakout. What this is going to do is it's going to give us a zone for where we should be looking for a trade opportunity moving forward. We can see today's candle, we just dipped into it and took off from there. So with all that being said, today we'd be looking for a long trade. Once we isolate the setup, let me start marking this over here. So for our long trades, let's say pre-market routine. long trades checklist. Number one, do we have a double-sided breakout? Again, one of the most important ones to look for is if we have that, that's going to give us an opportunity to look for a nice long trade moving forward. From there, we can turn the time frame down to look for our zones or a breakout trade. Out of everyone in the room, how many of you guys prefer zone trades and how many of you prefer breakout trades? Any preference for one versus the other? Zones or breakouts? That'll help me kind of gauge what to do for the event as well. Let's see. Oh, wow. 1, 2, 3. Got a lot of zone trades. I like that. See, a couple breakout trades. Let's see. Hey, Joy, why wouldn't you mark the high wick of the candle of the double-sided breakout? Let me just see. I think did I? Oh, the candle that's breaking. Got it, got it. So you'll notice how I marked it is that I marked it to this high and not the candle itself. The reason why is because this is the point at which the breakout happened. So if I moved my line, for example, up here, the breakout didn't happen here. The breakout happened at these two touches. So you want to mark it to where the initial breakouts happen. So the first breakout is this one. And then on the move up, the very next breakout is that one. Yeah, great question. See, breakouts are exciting, but I can only take so much excitement, right? And sometimes our breakouts are not the best breakouts. Been there where we take breakouts that are not in the best locations. They work out for a little bit, and then it can very quickly go against us. And then we want to panic and get out of the trade. So I get that. If we're taking breakout trades, we want to be very specific. And learning that, I understand a lot of us do take zone trades as well. So let's come down and kind of incorporate how we could use that information. So notice where price stopped. Here's where price stopped, and then we kept moving to the upside. So as a general kind of rule of thumb, as far as our zones, we would take the two candle flip. So that's here, that's our zone. But notice how price didn't come back to the zone. So we were right on direction. We found the double-sided breakout. However, how would we have gotten into the trade if our zone was down here and we never came back down to our zone? So price stopped here and here and here. Can anyone tell me why they think price stopped here when there's no zone? Because in essence, if everyone or most people in the room prefer zone trades, breakout trades would be a different story. But in this case, if we were looking for a zone trade, what clue was there that might have indicated there was a zone? See what Dan mentioned? Hidden controlling breakout pivot. So if you're new to the group and you're wondering, what is that? Well, that means that there's a zone here that we can't quite see. Because we just have this green candle pushing up, but there's something here that's holding price up that we can't see. And that would have been the place to go long, right? Is when price pulled back into this area here. Now, in order to kind of visualize where that is moving forward, this I'm going to be going into more detail during the upcoming event is how to find those hidden zones. But a lot of times we need to not just go down in time frame to find a zone here, but we want to understand the bigger picture. I'm going to put this down here as another topic. But this would be an example of a hidden zone in this area. If we're looking for the breakout trades, we would simply want to either take the breakout above that resistance, or as price starts forming new zones, we can take it to the upside. For example, on the 4-hour, we have a two candle flip there. Price broke out to the upside, and then that could have been a zone you would use moving forward. On the pullback, you qualify the zones with your strength. So let's focus on that zone for the first part. So two candle flip, if we were looking to splice into this trade, say we would want to drop down time frame, find our zones, and then what we want to do is we want to bring in some of the key criteria of our zones of what we're looking for. So when we're looking for our zones, typically we look for a two candle flip or wick over wick reversal. Does everyone know what those are by this point? If I had to guess, I would say most of us know what it is. If you don't know what the two candle flip or wick over wick reversal is, you'll kind of see part of that now. And finding the two candle flip and wick over wick reversal, we want to find very specific ones. So one of the key things that we need to look for, and I see traders make this mistake all the time, is that it was a zone that resulted in a breakout. Of a prior zone or resistance. So before I would want to take this two candle flip, and if I cover up the right hand side of the chart, in order to qualify that, one of the key things that I need to see is that did this two candle flip have a breakout to the upside? Did it break through a prior zone or a prior resistance level? I can see that there was a lot of resistance here coming in, pushing price down, and this two candle flip broke out to the upside and took out that pivot point here. So because price took out that pivot point, that's going to mean that's an activated zone, and we can look for a trade on a pullback. So strong breakout of a prior zone or resistance gives us the criteria that there's a lot of buyers here. We can look to take it when price returns to that zone. Therefore, price came back down, and we would have found the way to splice into the trade. When this is helpful is if our zones are getting further away and we're forming new zones, and we want to find a way to splice into the markets. So if you're some of those people or traders where you find really good trades and you're right on direction, but maybe you miss the move, then I would say what we'll want to do during the event is spend some time visualizing these details of, okay, maybe there's a new zone that's been formed. Because if you're waiting for this one, you'd be waiting for a very long time because it doesn't look like it's going to come back there anytime soon. So we want to find some simplified ways to monitor the markets so that we can splice in when needed. Two candle flip had a strong breakout. It broke through that prior resistance or zone, and it gets extra strength if it breaks through a prior pivot point. So why we chose this zone here is because this zone broke through these pivots, how you would map them out. So you can see price rallying, it comes down, and then that two candle flip is able to break through these prior pivot points. So that's what gave this zone strength. But again, if we're waiting hours, days for price to come back to the zone, and it never comes back down, we're probably missing the new information that's starting to form. So again, that's one of the big things. If you're missing trades, make sure that you're looking for new zones. As long as it breaks out of a prior zone or resistance, or even a pivot point, that's going to give it some more strength. Any questions so far? The two candle reversal is the second green candle green candle supposed to cover 3/4 of the first red candle body? Great question, Deepak. It doesn't matter how much it covers. The only criteria for the two candle flip is that it closes inside the range of the red candle. So theoretically, it could be a very small green candle. All it does is it needs to close inside the range. Now, if we're talking about some other criteria, I would say the higher up it closes, the stronger it's going to be. So the fact that this one did close high in the range of its own candle, that's going to be an odds enhancer. Yeah, so it's not as much of the range of the red candle. Two candle flip is just red and green, green closing within the range. But a trick would be to measure the range of the green candle. The higher up it closes inside its own range, the stronger it's going to be. And you can see both of these closed more than 50% of the range of the candle, and it had a strong move to the upside. All right, so there's our zone there. So now moving forward, we would look for the same thing, rinse and repeat. We have a red candle here, green candle here. We've got another two candle flip. That's going to be a really wide one, but this would be a zone we would look for moving forward. And then we can keep going down in time frame to find our zones. Now, how many of you guys, just out of curiosity, do you prefer the high time frames or the low time frames? Because then this will also help me gauge for the event if we're spending more time on the higher time frames or the lower time frames. Low time frames? Dances all of them. All right, so I see a bunch for lower. So if we are going to start going lower, my tip would be to isolate the range of the two candle flip on the 4 hour and then start working your way down. So if you prefer the lower time frames, and I'll take it from a 4 hour to a 1 hour. What the lines do is that it helps us to stay focused on where I'm looking for my zones. Because it seems like I would say the majority of the people, more than 50% in the room, say they like prefer zone trades and they prefer lower time frames. So if that's the case, to find our zones on the lower time frames, keeping these lines like this helps us stay focused on where we should be looking for our zones. So now I'm going to come down and I see a red and green candle, two candle flip that broke out to the upside. So now I can make that zone smaller, which is going to be helpful for our zone trades. Same thing down here, we've got a red and green. So now I can reduce my zone to make them smaller, which will fit within my trade plan. And then we would wait for price to pull back to these zones. This one's going to be at 59.42, stop at 59.24. Pretty large zone for the S&P. So then that just simply means let's take it down another notch. We've got our lines on it, so we know where to keep our eyes focused on. What do you guys think? Can we make that zone smaller? In these lines, do we have a two candle flip? So we start on the high time frames. When we want to get to the lower time frames, we know where to look. But do we have a setup in here in these lines? Red candle, green candle. So the green candle, yeah. So let me zoom in. Red candle coming down. Green candle closing within the range of the red candle. Let's see how strong it closed, as far as it closed pretty high up in the range of the green candle. Now I can make that zone smaller. So this is part of that top-down approach where we go from high time frame to low time frame to look for our trade. So now we have a much smaller zone. Let me bring up that list. Where did that go? All right. So as we're building our pre-market routine, we're looking for the double-sided breakouts. We're dropping down the time frame to find our zones. 2 candle flips, wick over wick reversals. That helps us make our zones smaller. One of the criteria that we look for is a strong breakout of a prior zone or pivot point. Did this zone break a prior pivot point? So did this zone have a strong breakout of a prior zone or pivot point? Low to high, high to low, low to high. You bet. Thanks, Dan. Yes, it did. Nice job, Joy. This zone broke this pivot, so that's going to give it strength. Everything we're doing, it's to hone in on where are the strongest trades, because we could be taking a million trades long, million trades short, taking it up and down, but the goal of a consistent trader to become consistent in your trading, to be confident in your trading, is to have a system, to have a checklist, and be able to understand where are the strongest zones consistently and have a game plan every single day. So that's why we're building out this checklist. So that zone broke that prior pivot point. At this point, I'm going to add in another odds enhancer, which is that the zone had a fake out breakout. What the fake out breakout is when price finds support. You can see as price was coming down, it hit support, it rallied up, it hit support, rallied up, and then it broke down. Now the fake out breakout happens when at this red candle, everyone is looking to go short and they're taking the breakout. And then very quickly it reverses back the other way and starts pushing to the upside. The fake out breakout is all of that combined where we break out in one direction and then we quickly reverse and break out in the other direction. When we have a 2 candle flip located at that fake out breakout, that becomes a stronger zone to take moving forward. So we want a strong breakout of a prior zone, resistance, or pivot. And we also want to see that our zone is at called a FOBO or fake out breakout. So we have a strong breakout. Yes. The zone is at a fake out breakout. Yes, it is. And that would again be the setup we would look for moving forward. Now, one of the other mistakes that traders make, so we have this as a separate kind of bubble over here, which is the top 5 mistakes traders make. Number 1 is not having a pre-market routine. That's okay, because that's what we're building now. But for everyone in the room, do you guys have a pre-market routine that you're consistent with? Do you have a pre-market routine where you have the same rules that you follow, the same steps? Step 1, step 2, step 3, same criteria of what to look for. If yes, that's awesome. And then hopefully you're seeing consistent results. Nice, Dawn. Terry says, getting there, not totally. And so that's where this event is going to be very important, is because during the event, we're going to be building more of that systemized step by step. So if you have a pre-market routine, but maybe you're not sticking to it 100%, or you change your rules. Again, if you have a pre-market routine, but the rules are constantly changing, or you're bending the rules, or you're taking trades that aren't part of the pre-market routine, then I would say you really don't have one. Oh, great question. Fake out breakout can be somewhat subjective. Totally. How can you make it more objective? Good question, Jerry. So to make it more objective, what I would say is in order for it to be a fake out breakout, you want to make sure that that initial breakout clears a prior zone or pivot point. So I don't want to make it too complicated, but these touches when we broke down, notice that that breakout was strong enough that we took out a pivot point to the left. So to make it more objective, I would say the fake out breakout needs to break through a prior zone or a prior pivot point. Because what that tells us that the only way price was able to break below that pivot is that there was a breakdown. That way we're putting rules on it instead of saying, did it break down or is it still holding a support level? If it breaks a prior pivot point, that's going to give us more clues that that's a stronger fake out breakout. Yeah, great. Glad you asked that. Strong breakout. Zone is at a fake out breakout. Let me add that here then. Zone is at a fake out breakout. Takes out prior pivot. Kind of ties back into, I'm just going to condense that for the first one. Kind of ties back into the first odds enhancer. Does our zone have a strong breakout of a prior pivot? That makes our zone strong. What makes the zone even stronger is if it's also at a fake out breakout that can take out a prior pivot point. And you can see how those would make sense as far as strength is concerned. That, yeah, if it's taking out prior zones, prior pivots, then it's got to be a pretty strong zone to take in order to do all that. You bet. So look at Dan's comment. He's saying high time frame pivot break would be stronger for a fake out breakout. Yeah, so if we're taking out a pivot point on a high time frame, then on a larger scale, we want to visualize that and say, okay, now I really know where the markets are going because that's going to give us more clues for strength. I just zoom out a bit, move my lists over here. On a high time frame, notice that we had all this resistance and support. So we have support on the bottom, resistance on the top side. In reality, we have all this support. We have a breakdown of support and then a much larger fake out breakout to the upside. Yeah, I'd say typically 4 hour and up. Absolutely, yeah, those are the higher time frames. 4 hour, daily, and then even the weekly too. So we had a strong breakdown of all that support, breakout. That became a fake out breakout when we broke out to the upside, and we broke these much more pivot points to the left. We took out that pivot, that one, that one, that one, that one, broke through all of those pivots. So then that would tell us at that point, the trend is up, just based on those two odds enhancers and zooming out a bit. The strongest breakouts and the strongest fake out breakouts will tell you which direction the trend is. You bet. Yeah, the higher the time frame, the more significant the break. You bet. Because we're down on the 15 minutes, so I'm bringing in kind of more candles. But 4 hour, daily, weekly, those are all going to be very important for seeing these larger moves. And we'll be going into all that during next week's event. All right, so zooming back into here. So again, number one mistake is not having a pre-market routine. Not even just not having a pre-market routine, but not being consistent with one, bending the rules, being flexible. Then I would say you really don't have a pre-market routine. Pre-market routine means you're sticking to the same rules each and every day you come to the markets. There you go. Dan mentioned I like to use the daily highs and lows for the break significance. Yeah, I like that tool that you use, Stan, where being able to see once price breaks a daily high or low. If we have a break of a high or a break of a daily low, that's a really significant break. So we would want to pay attention to that for our trade opportunities. I got to look into if Thinkorswim has that tool to find those breaks. But yeah, if you just go out to the daily time frame, for example, and you mark the high and low of the candles, of the daily candles, when it breaks in one direction or the other, that would be the significant break, and you would look to trade in that direction. All right, let's see. Upper zone broke the low and the high of the prior. Yes, so the daily candle, what I'm guessing is the prior daily candle was it this one now? Prior daily candle high was there. I think the prior daily candle low was here, or no, here. So we can see we broke out to the upside, broke out to the downside. So seeing those breaks can give us an idea of which direction to look to trade in. Yeah, that'll make much more sense. I'm trying to do on the 15-minute, which is kind of hard to see, but yeah, when you're looking at those daily candles and you see those breaks, look at that as an indication of which direction to trade in. So we started off looking for long trades because of the daily double-sided breakout, and that's why we're looking for long trades. So number one mistake, having a pre-market routine. If you have one, that's great. Maybe you'll want to incorporate some other information into that pre-market routine. If you don't have one, then we're going to start building it step by step. The other mistake traders make, number two, is actually picking tops and bottoms. So if we're looking at trading in the markets and we're trying to choose zones when the markets are moving up and we're trying to take short trades, we want to be aware of what the trend is. So trading with the trend, understanding which direction to trade in, kind of ties back to what we were just talking about. Trade with the trend, that's going to be important that we want to work on moving forward. Number three is if we're not seeing the right zones. What I mean by that is not only the two candle flip or the wick over wick reversal, but it's also going to be the hidden zones as well. Or we'll go back to that one in a second. 4 is looking too far left. Remember, we want to stay current with what's going on in real time. And number 5 is a big one, which is not knowing when to get out of a trade. So if we're taking a trade and we're holding on to it and we think it's going to take us to the moon if we're looking to go long, but then the signals are there that are telling us to get out of the trade, we need to pay attention to that pretty objectively. So we found our zone. We could look to take this on a pullback. You can continue to go down in time frame to find your smaller zone in there. You just want to make sure that you're staying within your lines to look for those zones. Back out to the 4-hour. Leave those there for now. So that would be if you're looking for zone trades. We found the zone trades that would have helped us splice into this move to the upside. We have a zone trade moving forward. Next week during the event, we'll keep an eye on this and see what happens moving forward. As far as the daily candle, how would we have gone long in a zone that was not necessarily there? So there was a zone here, but there was also one down here that we never came back down to. I would say when it comes to the double-sided breakout, there's typically going to be two zones. The double-sided breakout often has a zone right near the breakout point. So here's where we broke through all that resistance. We broke out to the upside. A lot of times there's a zone right at or slightly below that breakout, and the other zone is going to be at the origin. Now, if we're looking at a very strong breakout, in this case, the double-sided breakout closed above the resistance. That was a really strong breakout. That means that we can look for the hidden zone if it's there, and where we're going to be looking is that area right at the break of resistance. Another kind of odds enhancer that we'll talk about more in the event is that why price stopped here is that there's actually a two candle flip to the left, kind of the opposite side. So let me do that for a moment. I'm going to remove the other lines that we did. So price is stopping here and there's no zone, right? It's coming here, it's stopped here. So if we look left, notice that there's a two candle flip to the downside. We have a green and a red. That two candle flip had a breakdown. It broke through this support, had a strong move away. And then that would have been an area where we would have looked for a short trade previously. If we were seeing this two candle flip, it's breaking down. A lot of traders would say, you know what, maybe I should look for a short trade here. But instead, it completely broke through that two candle flip. How do we use that to our advantage? Because maybe we set up the short trade and we were wrong and price ended up blasting through it. But what that's going to tell us is that, on that breakout, there might be that hidden zone that Dan mentioned before, a hidden controlling breakout pivot in that area that we would want to look for a trade moving forward. So to keep it simple, you can simply isolate the zone, like how I did here, and that would be your zone moving forward, even though it's in the middle of a green candle. If that makes you kind of unsure and maybe you want to find a zone in the green candle, then that's where you would just isolate that, the two candle flip. Now we know we're looking in these two lines, and that's where we would look for on the smaller time frames. So let's come down to let's speed it up. Let's go down to a 30-minute. What clue do we have on the 30-minute for a hidden zone? We're looking in these lines. What's the clue that's leading us to say, here's where there may be a hidden zone? Okay, nice job. See the wick over wick here? Two wicks crossing. And I like that Joy mentioned the continuation doji. You can see that really this one candle here, price compared to the other candles which are very long, these two candles in here are more doji type candles where the body is smaller in relation to the range of the candle. As you can see, we have a big move up, and then it becomes a small candle, doji candle, and then back to the long ones. Those doji candles can pinpoint us to where we need to be looking for our zone. So I'll leave my outer lines there, and I'm gonna start to isolate kind of those clues that you're seeing, the wick over wick, the continuation doji. I'm gonna put us right in here for our zone. And that's just the 30-minute, but say you're someone who needs more detail. Let's take it down from the 30 to let's do a 15. Nice job, Don, Joy, and Dan. 15. 15-minute really shows that wick over wick, and it's inside our prior zone. Wick over wick. I could make that just a tad bit smaller. Not much, just a little bit. There we go. Since it's still a wick over wick, let's come down to the 5-minute. Anything in here? Looks like just 3 doji candles. We've got a doji, 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 push to the upside. So what I'm looking for at this point is, do we have a 2 candle flip? Do we have a wick over wick reversal? Or do we have another double-sided breakout? We don't have that on the 5-minute. Let's come down to a 4-minute. All right. What do we have on the 4-minute time frame? Is it a 2-candle flip, wick over wick reversal, or a double-sided breakout? Two-candle flip, wick over wick reversal, or double-sided breakout? Perfect. Everyone see that? Are we following? Good job, Joy, Dan, Terry. If anyone's lost, type it in the chat and let me know. But yeah, now I can take my zone. Now we've got a 2-candle flip, red candle, green candle, 2-candle flip. Now we're making our zone smaller, which is important for our trade management. So now our zone on the 4-minute time frame would be from, let me remove some of those lines. So we're looking at our larger hidden zone. We found a zone inside it when we dropped it down to a low enough time frame. We've got a 2-candle flip. Our zone size is going to be 59.20 to 59.15. That's going to be 5 points. How much risk is that on the S&P contract? How much risk is 5 points on the S&P? Right, so 250 on the full size contract. Thank you, Terry. That would be on the micro contract. It would just be $25. Thank you, Dan. All right, so not too bad. We got down to a 4-minute and found a zone that we'd want to. Oh wait, I can make it smaller. Sorry. Pretty sure some of you guys were. What are you doing? So we go to the high of the green candle, red and green. That's the breakout. So it's actually 4 points, $200, 2-candle flip. Bring in those odds enhancers from our lists before. I think I lost it. It's somewhere else, but that 2-candle flip, did it break through a prior pivot point? You bet it broke through this pivot point and it broke all that resistance to the left. Is it at a fake out breakout? I would say this one, not necessarily. And that's just another odds enhancer. We want to try to bring in as many as we can. But this one did have a very strong breakout, broke through that pivot point, and we can see moving forward, price came right down into our 4-minute zone. So remember where we started? Let me put the text on there. That's our hidden zone. And I wouldn't try to find them unless you have a very specific setup, which is going to be, remember where we started on the daily time frame? Does anyone recall why we looked for that hidden zone on the smaller time frame? We look for hidden zones when we have what sort of a setup? There we go. Putting the pieces together, and this is what we'll do again in the event, is that when are we finding hidden zones? Don't try to find them all over the place. If you just start saying, wow, the hidden zones are cool, I just look for a prior zone and there's a hidden zone there, it's not going to work out, so don't try doing that. We have very specific reasons for finding those hidden zones, and it's exactly as Dan mentioned. We had a double-sided breakout. It broke down and then broke out to the upside. Double-sided breakout, it had a strong breakout to the upside. When we go down in time frame, we're looking for 2 zones. We want to see one zone at the origin. That one we can see, it's right here. Pretty easy to see. but then you may also run into the hidden zone. That's where we want to find our hidden zones, not for any setup, but when we have let me write this down. We have a double-sided breakout that has a strong breakout, which we can see here, it broke through that and it did not turn back at all. It just kept rallying and it broke through from 59.25 all the way to 59.45, 20-point move up. Had a strong break through that. That's when we can look for two zones. One at the origin. This one, so this would still be a zone we could take moving forward. And then the second zone, sometimes it is here, sometimes it's not. That's going to be a lot of times our hidden zone. Cool stuff, right? So and maybe this is something you guys would want to back test. I would say prior to next week's event, had a couple people mention, having homework or doing back testing. What I would like you guys to do for back testing is look for the double-sided breakout on the daily time frame, or if you really only prefer the smaller time frames, go down to the smaller time frames. But as a kind of a homework assignment to prep for the event, just so you have an edge on kind of what we're going to be getting into, is identify areas where we have the double-sided breakout, meaning it breaks down, breaks support, breaks resistance, and then 2, locate the best trade opportunity from that double-sided breakout. So in this case, the trade opportunity we would have wanted to take was in our hidden zone. Locate the best trade opportunity inside that double-sided breakout. Is it always at the hidden zone, or are the better trade opportunities at the origin? Kind of understand where does price stop when we have a double-sided breakout. So identify them and then locate the best trade opportunity. 3, document your findings. This will set you up for kind of prep for next week's event. But just a simple homework assignment is do your back testing, especially if you haven't used the hidden zones before, the double-sided breakouts. This would be a very simple assignment to just go back and find every place where that you have a double-sided breakout. Where was the trade opportunity we would have wanted to take? In this case, it was our hidden zone. If you have any questions, you can bring them into the event. Again, if you came in late to the event, into the showcase, the event's going to be next week. I'll post the link in the chat. Many of you have signed up already, but we're going to be going into more of these hidden zones too. So I'm very excited about some of this new content and giving you those details of what to look for, especially when the zones aren't quite as easy to see. We may have those hidden zones as well. I'm going to post the link in the chat to register. Give you the special offer. So stop making the same mistakes. What are the 5 mistakes that traders typically make? Not having a pre-market routine, picking tops and bottoms, not seeing the hidden zones. On this chart here, I pointed to where some of those hidden zones were located. And we're going to be finding those hidden zones so they're not going to be hidden anymore. Kind of seeing what's not so easy to see. And if you're struggling at finding your zones and prices stopping in areas and you don't understand why, it's going to go back to the hidden zones. So we'll spend more time on understanding them. We just went over kind of one setup today, but there's a couple other variations that we'll want to learn next week. Looking too far to the left, if we're trying to bring in too much information, that's a key mistake, and not knowing when to get out of a trade. Those are the key mistakes that we make. In order to simplify that, we need to have a step-by-step pre-market routine. Step 1, step 2, step 3. just like what we're doing today. Our step-by-step pre-market routine so far is telling us, I'm just going over again one chart, but I'm saying, okay, what's the setup? The setup for today was the double-sided breakout. That told us we should be looking for long trades. Turn down the time frame, find your zones, bring in those strength odds enhancers. If you're someone who wants to take a breakout, I know a couple of us mentioned being someone who looks at the larger time frames. If you wanted to keep it super simple, you got a double-sided breakout. Where could we go long? I think I actually gave you guys access to draw on my screen, which we'll be able to do in the event. But can anyone in the group click that marker in the bottom left corner and just point to where you would look to go long if you were a swing trader? Here's the double-sided breakout. Where could you have gone long on a breakout trade today on this candle? Where would have been your entry point? And all of us should have this kind of circle in the bottom left corner of the Zoom screen. When you click that, it'll say annotate, and you're able to draw on the screen and point to certain things. Thank you, Randy. There we go. Thank you, Randy. Thank you, Jerry. Exactly. You want to keep it simple. Totally understand. A lot of us swing traders, we just like to keep it simple and not spend too much time on the charts. That would be your breakout point. From there, that high was, let's see, 59.44. What is that? We're at 59.71 minus 59.44. That's a 27-point breakout. $50 per point. That's a $1,300 move. Also have in mind, and let me know, what is your kind of daily goal for trading? Do you have a daily goal? Do you have a weekly goal? This will also help me if you want to send me an email. Let me know what your goals are in trading, what you're looking to make. And then I'll show you the ways kind of where we can look at the high time frames and the low time frames to reach those goals. But $1,300 not so bad on one contract. Keeping it simple with a double-sided breakout and going long there, as Randy and Jerry mentioned, $1,300 move, or going down in time frame to find your zones. In this one, we found the hidden zone. When you register for the event, so we'll be trading live because it'll be in the morning session. We'll be setting up trades, seeing the results in real time because we'll be monitoring day in and day out. That once you register, you can pick one of these two options. You can either get a bonus 1 hour of private coaching, or you can choose from one of the previous 3-day event recordings. So kind of the details of the first one that I had, the second one, the third one was our bear market boot camp. And then there was the most recent one we had, which was the 3-day bull market boot camp. That one would be included as well. And you would simply get the recordings from those events. So you can choose one or the other, one of the previous events or the 1 hour of private coaching. Nonetheless, once you register, send me an email. Let me know which one you'd prefer, the coaching or the event. And let me know kind of what your goals are for the event. What do you want to see? I'll be bringing in a lot of that new content with the hidden zones and just helping you guys with this pre-market routine. We kind of had to go quickly today and just focus on one setup, which was the double-sided breakout, but spend some time looking for these prior to the event. What do you notice about them, and how can this help your trading become more consistent? This is going to be a key part of our pre-market routine during next week's event. Hey, Tom. Yeah, looking forward to having you there. If you're going to miss parts of the event, you guys will still be on the emails for the recordings. I would say if you are able to watch the recordings, that's going to be helpful. That way you can send me any questions that you have for the homework as well. Any questions on what we've covered today? It went by super fast, but any questions on today's session? Any questions on the hidden zones? Any questions on the double-sided breakout or next week's event? If not, it was a pleasure having everyone here. Thank you, Don. Make sure that you get registered. Again, if you have registered already, you'll receive the Zoom links on Monday for the event. I look forward to seeing you all there. Have a great rest of your day, everyone, and have a great weekend, everyone. I'll see you guys all next week. Bye-bye.